What's up, everyone? Welcome back to the Coder's Trade. If you're tired of buying a stock only to watch it crash just after you enter, then listen up. Most traders fail because they can't see the invisible walls of the market. Today, I'm giving you the literal floor and ceiling of trading. That is, support and resistance. We're going from guessing to mastering pro-level accuracy in just next 5 minutes. Let's get it. Think of the market like a building. Support is your floor. It's the price level where buyers are waiting with their bags open because the price looks like a steal. And resistance is your ceiling. It's where sellers are standing with hammers ready to knock the price back down. Here you can see example through diagram of both also. If you don't know where the floor is, you're just free falling into a loss. Why does this happen? It's simple physics, guys. Prices move because of supply and demand. When everyone wants to buy, price hits a floor and bounces. When everyone wants to sell, it hits a ceiling and drops. Mastery isn't magic. It's just reading the crowd and knowing who's winning the fight. How do we play this? First, trend reversal. If that floor holds, we bounce high. Second, breakouts. If the price smashes the ceiling with big momentum, it's go to the moon. But here's the pro secret. Role reversal. Once a ceiling is broken, it often flips and becomes your new floor. Yesterday's enemy is today's best friend. Support and resistance helps you determine the entry and exit points and tells you where to take profits and play stop losses. So, let's learn how can we draw that. Stop drawing random lines all over your chart. Follow my errorless checklist. Use a 15-minute time frame. Use the swing high-low indicator. The gold rule. You can cut through a wick, but never the body of a candle. Now let's see the most famous and common type of support and resistance. First up in this is regular support and resistance. Regular support is your classic floor. If a stock consistently bounces at 50 Indian rupees, that's your line in the sand. Regular resistance is that 100 Indian rupees wall the stock just can't climb. It's simple, but don't get too comfortable. The market loves to play games with regular levels. Next up is you. Watch out for the traps. That is, trap support and resistance. A trap support happens when the price fakes a break below the floor to scare you into selling, only to rocket back up seconds later. Same for trap resistance. It tricks the breakout buyers and then crashes. Don't be the exit liquidity for the big players. To avoid those traps, look for a doji candle at the level. It signals pure indecision. If it's followed by a big green candle, the bounce is real. Also, use uptrend support, that diagonal floor connecting higher lows to ride the wave safely while the trend moves up. My personal favorite hack? The 44 moving average. This is a moving floor that follows the price up. If the price pulls back to this 44 MA and bounces, it's a high probability entry with a tiny stop loss. It's dynamic, it's mathematical, and it's absolute fire for trending stocks. This is the summary table of these support and resistance, which you can also view through my platform. The Coder's Traded in. Here are other important types also which helps you determine support and resistance level. First one that is psychological levels. Line round figure amounts like 100,000, 500, etc. Next up is historical level of the stock price, or volume-based levels, where high trading volume often comes, or Fibonacci levels, etc. And other than that, there are many more which you can see in my platform. And link for that support and resistance module is in the description. And always make sure to master the skill first, and the money will follow.
Thank you. I hope you understand this, and please don't forget to like, share, and subscribe. I will also appreciate any suggestions in the comment section, and please visit our platform, The Coder's Trade, with the link given in description.